The Supreme Court just blew up Trump's tariffs, meaning that billions of dollars could be refunded to companies and the economy may shift. Over $175 billion worth of tariff revenue may have to be refunded to companies, thousands of whom are already suing the government for this money. Now, we don't even know if refunds are possible, or if they were, if this administration would carry them out, and if so, for how long. So the economic impact of these tariffs being alleviated is questionable at the moment. Global supply chains have been very strained over the last year following Trump's tariffs, and this could alleviate some of that pressure, driving prices down. That said, Trump has already announced that he wants to levy another 10% tariff on all goods globally, so we'll just have to see how that works out. That said, this is a huge check on the executive's powers and has a real chance of lowering business costs and costs for consumers. But we'll really just have to see how this goes as this situation continues to develop. Have a good one.
This could be a turning point. The Supreme Court has ruled against the tariffs. The economic consequences are still unclear, and we will have to see how the situation develops.
Hey, did you see the market reaction to the Supreme Court decision on Trump's tariffs? The Supreme Court struck down Trump's broad global tariffs in a 6-3 decision. Now, the tariffs were imposed using an emergency law, and the court ruled that law does not give the president authority to set tariffs, just Congress. Now, that ruling ends wide reciprocal tariffs, but targeted tariffs on things like steel, aluminum, cars, lumber, those stay in effect. Okay, as for the market reaction, companies that were affected by the struck down tariffs could seek refunds into the billions of dollars, and we saw shares of some retailers and import-heavy companies that initially rallied, but experts warned that could quickly change if we were to see a new round of some other targeted tariffs. Retailers also face the complicated question of what do they do with their prices, which rarely come down after they've gone up. So in the end, we saw some short-term relief for stocks, but there is still trade uncertainty.
Look, here's the thing. Prices rarely go down after they go up. So enjoy the relief while your bills stay the same. Short-term relief, long-term uncertainty. But remember, the damage has already been done.
Justice Kavanaugh wrote that the United States may be required to refund billions of dollars to importers who paid the IEEPA tariffs, even though some importers may have already passed on the costs to consumers. So I just want you to make no mistake. I want this to be crystal clear that you and I will not be receiving the tariff refunds. It's the big corporations, it's them that's going to be receiving the refunds, when in reality, that's money that was coming from you and me. So essentially, I don't know how else to put this. They ripped us off. This was robbery in plain sight. Currently, about 2,000 companies have lawsuits suing for their tariff refunds. It's going to be about $140 billion, and it's in all industries.
This is the part that hurts. The corporation simply passed the costs on to consumers. Now the tariffs have been declared illegal, and $140 billion in refunds are going back to them. Not to us. Now they get the refund and keep the higher prices. We finance their court victory. Classic. That's how it works.
When President Trump came in his first administration, he realized that our domestic structural steel mills, the people who actually pour the molten steel and make the beams, were being hurt by China tremendously, but other countries too, but mostly China. And that's when we put in Section 232, which were the tariffs on Chinese steel. So when we testified in D.C. for the dumped steel, one of my co-defendants who testified, he's one of the big guys. He does all the big stadiums in the country. He testified in D.C. that he had bid against China for a stadium, and if he had donated all of his labor costs, he couldn't match the Chinese fabricated, delivered to the U.S. price.
Wow. Chinese steel so cheap that an American company could give away all their labor for free and still lose the bid. That's not a market. That's a demolition strategy. Tariffs were supposed to fix it. Whether they did is another question.
The Supreme Court ruled 6-3 that Trump's 2025 global tariffs were based on the wrong legal foundation, potentially opening the door to refund claims of up to $175 billion. Trump reacted immediately with a new executive order, a temporary 10% tariff on all imports under Section 122. valid for up to 150 days. This morning, the White House confirmed that existing trade deals are now aligned at a flat 10% rate. In several cases, that actually lowers previous tariff levels, easing immediate escalation concerns. Markets showed mixed signals. Equity closed slightly positive. The dollar softened, but the real move happened in safe havens. Gold and especially silver surged sharply into the close, a clear reaction to geopolitical uncertainty.
Tariffs ruled illegal. Trump signs new tariffs hours later under a different statute. $175 billion in refunds possible for corporations, not you. Some rates actually dropped. Markets shrugged. Gold went up. The legal dance continues. The policy stays the same.
I have heard from these executives themselves that they have been firing people for really the past 6 months or so and are going to continue to fire more people because of the tariffs. Depending on where their products are coming in, that's a 15% to 25% impact on their margin, the profit that they make. And in order to maintain profit margins, because the overwhelming majority of the companies I work for are public companies, they have to maintain shareholder value. They have to cut from their largest expense. What is that? Wages. You have to fire people in order to try to protect your margins because you're being taxed via the tariffs, 15 to 25%. Then on top of that, you have AI, of course, taking out some jobs, but this is not the immediate impact. However, because these companies are firing people, it is increasing the rate at which companies need to adopt AI and replace jobs, because if you fire a bunch of people and your company can't run, well, that's an issue. So you need something that provides efficiency gain for the people who are still there. And so the tariffs and the margin crunch is increasing the rate at which AI is replacing jobs and getting rid of them entirely. And yeah, sure, there will be some jobs that are created out of this to help support AI and all that kind of stuff. But in the short term, it's not. And yeah, there's a lot of factors that go into what happens in the labor market. It's not just tariffs, all that kind of stuff. However, it is the largest single reason that is driving layoffs today. And I hear it directly from my customers.
This is the reality behind factory closures. To protect stock prices, they lay off workers. Steel mills shut down, manufacturing plants stop operating, and the jobs that were supposed to return disappear even faster. Tariffs didn't save American jobs. They are destroying them.
So if we look at this graph that was posted by the White House, it's showing the total U.S. steel production measured in metric tons between 2024 and 2025. And when you first look at this graph and compare both the red as well as the green bar, my first instinct would be, wow, steel production in 2025, right, when we had these tariffs placed on steel and aluminum, have caused U.S. steel production to double, right? The green bar, the 2025 steel production, looks twice as large as the red bar. Except when you look at the actual scale, that's not what is happening here, right? In 2024, total U.S. steel production was about 80.8 million metric tons. In 2025, total steel production in the US was 81.8 million metric tons. And when you do the math to calculate the percent change in last year's production of steel versus this year's production of steel, it is only about a 2% change. Now, the question, right, is why would the White House post a graph that is misleading like this? And a lot of this has to do with the fact, like I mentioned before, that there are these now tariffs on steel import, right? So in June of 2025, the President and the Commerce Department instituted Section 232 tariffs on steel and aluminum imports, as well as derivatives, so products that contain steel and aluminum across nearly all trading partners. And the idea, right, of these tariffs was to boost U.S. production and to increase jobs in the steel and aluminum industry. And so this graph is trying to show, look at all of the steel manufacturing that we have in the United States. Except again, when we take the numbers from this graph, steel production in the United States has only increased by about 2%, which yes, is an increase, but it's way less than the 100% increase that is being demonstrated by this graph.
Steel production up 2%. White House graph makes it look like 100%. Meanwhile, steel factories are actually closing and laying off hundreds of workers. But sure, focus on the misleading graph. That'll pay the bills for the families in Dearborn.